Beijing has banned leading tech firms from buying chips from one of the world's largest manufacturers. AI chips produced by California-based tech giant Nvidia.
Hi everyone, I'm Watana, and in this video I'll talk about the China's ban on Nvidia and how this decision affected the stock market. We usually think stock prices move because of profits or new products, but in reality, politics can also change prices fast, and this story is a perfect example. In September 2025, Chinese regulators told big tech companies like ByteDance, Alibaba, and Tencent to stop buying Nvidia's AI chips, such as the H20 and Pro 6000D. This came after the US restrictions that already stopped Nvidia from selling its most powerful Blackwell chips to China. After this news came out, investors got worried. Nvidia's stock dropped from about $181.7 to below $170, around a 7% fall in just a few days. The drop happened because people feared Nvidia would lose a big part of its business, due to China being one of Nvidia's largest markets, and losing it could mean less income. But soon, the stock started to recover. By the end of September, it went back up to about $192, and by early November, it reached its new all-time high of around $200. Why? Because investors realized Nvidia still had strong global demand, especially in the US, Europe, and other Asian countries, showing that the fall was only temporary. This shows how quickly investors' emotions and new information can change stock prices. The ban also made people think about other big American companies like Apple, Tesla, Microsoft, and Amazon that does a lot of business in China. If tensions between the US and China continues, these companies could face bans or limits. For example, Apple depends on China for iPhone production, and Tesla builds many of its cars there. This makes investors more cautious, and sometimes that fear can cause their stock prices to drop too. In finance, this connects to the concept of risk and return. When risk goes up, in this case political or geopolitical risk, investors demand higher returns. That means stock prices usually fall until investors feel the reward matches the risk. It also shows market efficiency, showing how quickly new information like this ban is reflected in stock prices. Nvidia's 7% drop happened within just hours of the news spreading, prove that financial markets react fast. To wrap up, China's ban on Nvidia wasn't just a tech story, it was a financial market story. It showed how political decisions between two major economies in the world can impact billions of dollars in market value. For investors, it's a reminder that the stock market doesn't only respond to earning, it also responds to uncertainty, politics, and global power struggles. Thank you for watching, and remember, understanding the news is the key to understanding the market. See you in the next video.